Okay, perfect. Welcome to the webinar then. Our sound check is perfect. Welcome to everybody. A lot of people here from many parts of the world, from Romania, South Africa, Portugal, Singapore. Nice to have you here and for your support. Some of you maybe don't know much about supply and demand, and many of you, I'm sure that you will know. Hello, Henry. But we forgot many times we forget about a very simple thing, which is the basics. We have to go back to the basics, and I know that for a fact because apart from the set and forget private community, there is the Forest Factory free community, and there I'm trying to give support as much as I can. As you know, I'm trying to reply to all emails there, and what I can see there is that people are not reading post number one where the rules are, and it takes time, it takes a hard work, it takes a lot of testing as specified in post number one, and you have to do it yourself. No matter, like today I posted a message there, no matter how, if I gave you a piece of paper with all the secrets about supply and demand, all that you have to do, you would not be able to follow the rules because your brain is not ready for that. I mean, that's the way the human brain works. You need to create habits, and habits are created by repetition. And the only person that can repeat one trade and set up and rule over and over and over again until you die, I mean, is yourself. Nobody else can do it. So if you don't work hard to test these rules, or no matter what other rules or strategy you are trying to test and get proficient at, if you don't do that, you will never ever get the habit and the confidence to trade the rules. It's just impossible. Okay, if you wanted to learn Spanish, I'm sorry for this introduction because I read that so much and see the charts, and not even there but also on the private forum sometimes, but it's normal. I mean, we have to go through that stage, so you have to do that. I mean, if you want to learn a language, you will learn Spanish, and it is my native language. Will you learn Spanish by reading a grammar book or the dictionary 100 times? No, you will not, because that will give you maybe a lot of vocabulary, but you will not be able to connect all the words to make sentences that are legible and understandable and comprehensible, and that takes years to learn a language, or to learn to dance, or to learn a profession, so a craft, whatever. So this is the same thing. So this is why 95% or more of traders do not succeed at doing what they are trying to do to be profitable, because they don't try hard enough. Believing is not enough. Believing has to be accompanied by a really hard work, and that is the same in all fields of life. Okay, so sorry about this brief introduction, because I believe most people don't get what they want in life because they, first of all, don't know what they want. That's the only reason why people don't get what they want. So let's try, after all this, sorry for, this is not going against or for anybody in anybody specific. I mean, it's just a general thing. Okay, this is how we work, and we have to be aware of our limitations are as human beings. Greetings, Hugh, welcome. Hugh, Gennady, Henry, Jim, Mike, Daniel, a lot of people here. Thanks for your support. So are we ready? So we are going to start with the basics, which are not basic. I mean, we just need two objects, two features on a chart in order to make our analysis, and that is a rectangle and a trend line. And that's all we need. We don't need MACD, we don't need RSI, we don't need CCI, we don't need Bollinger, EMA crosses, anything else. We don't need anything else. That's simple. Okay? So let's try to analyze one pair from top-down analysis from one pair. I don't know, the first one that people put write on the questions pop-up window. Okay, but something which is not so popular like the euro dollar. Okay, so something else. People say euro dollar, pound dollar. Okay, dollar yen. Okay, no, dollar yen. Mike said dollar yen. Okay, it's different. Okay, people just want the majors. the euro, the pound, and all that. Let's start with the dollar yen. Mike mentioned it, okay, and we'll have time to go through others, okay. So let's start with the dollar yen from scratch. Let me open it. Dollar yen is over here, okay. So let's start from this chart on the monthly, okay. So first of all, we need to look at the chart, and there's one thing that I'll always repeat over and over and over, and this comes with experience, okay. When you look at the chart, and this is something very important, and you take more than 10 seconds or 5 seconds to decide which is the trend of that chart, forget about that one, because you will be thinking too much, okay. So it has to be really obvious. When you look at this, what is the trend on the monthly? Isn't it clearly down? Yes, it is clearly down. But when you look at areas when prices like, I don't know, let me take a look at the daily here. What is the trend here on the daily? Can anybody tell me? This is just a quick thing before we start. This is consolidation. Okay, we don't have a clear direction there. So when you look at the chart and you see something which is not telling you a clear direction, forget about that one. There are 20, 30, 40 pairs. You can trade futures, you can trade CFD indexes. Forget about that one. I mean, we are talking always with the swing and position perspective. Okay, we are not talking about intraday or scalping. That's a different thing. Whoever wants to do that is perfect. But I'm talking about position and swing trading, where you don't have to be worrying about the levels and looking at the screen all day long. So what is the trend now on the monthly? How can we assess the trend on the monthly? Anybody? The trend is up. But why is the trend up? Because, okay, you see that these candles are up, okay? Bullish candles, and okay, this is up. But here we also have a like candles up, and here we have candles down, but doesn't mean we have a downtrend. Okay, so like Hugh said, or a lot as well, and Chris, 2V patterns, 2 valleys. So once we define a trend, when we do have supply be an uptrend is defined with supply and demand rules into consideration when demand areas are respected and supply areas are removed. So when you look here at the chart, do we have, this is supply, this is supply, this is supply. So in the past we did have this trend line. So areas of supply have been respected all the time, okay, until we got this supply area removed. So right there at this point in time, down there on the monthly, I don't know what happens there. So there, right there, okay, it is where this trend line was broken. So there was a change in the direction. Okay, but once we break this trend line down here, this candle, as per the rules in post number 1 first factory and the rules that I have laid out in order, this candle there, this full open high close and low high open close candle confirms that the downtrend is no longer valid. That doesn't mean that this is an uptrend. It just means that we have entered a consolidation stage where we have broken the trend line, but we have not yet removed any supply area, okay, and we don't have the possibility of drawing an ascending trend line because we do not have 2 valleys. So in order to have an uptrend, we need either to remove at least 2 areas of supply or create a valley. That's one of the rules which is on all the posts. Okay, so here, what do we have here? Let's start from here. Okay, this is the area where markets changed dynamics. It hit the all-time low, I believe, at least on this chart, all-time low, and after we broke this trend line, then we created a brand new area of demand, and then price hit there. So we're going to analyze all this. Okay, so let me do this. At this moment in time, let me describe this. Wasn't this the trend line at the moment where that happened? I mean, we had a valley and another valley. Now a CP pattern there, another valley, and then another valley. So at the time when price was there, you can interrupt me at any moment if you have any questions. Okay. So here we do have this valley, obvious valley. This is a drop, a base, and a rally that made a higher high. So this is a V shape. The first leg drops. This is the basing, and then rally, base, rally, base, rally. We do have like 2-3 CP patterns of demand, and then we do have this rejection there, and then price rallies. So once we do have this valley and this second valley that made a higher high than the previous first valley, second leg, then we do have the possibility of drawing a trend line. Never before. Is that understood? We do not take into account CP patterns, continuation patterns, in order to draw trend lines. We don't do this. We don't do this. Never. Ever. Because this is a continuation pattern. Okay? So we don't do that. We wait for that valley to be formed before we can say we have an uptrend on the monthly. In this case, the monthly, but practice fractal. So no matter what you do, it will be repeatable applicable to all time frames. Okay. Roman is asking, do we plan any trade on 4 hour if we have consolidation in higher time frame on daily? You have to wait for confirmation, Roman. If we are trading on the daily and we have consolidation there, you need a trend at least on the 4 hour and direction on the daily. We are trading. I'm trading, and I'm trying to encourage people to trade with the daily trend. If we are in consolidation, you have to trade at the extremes and wait for a confirmation type of trade. Brand new demand or supply being formed in higher time frames touches. Okay, Roman? So once we do have this, okay, we are allowed to draw this trend line. In the beginning, it was like this. It wasn't like that. I mean, we do have this trend line here broken. Okay, this is broken, a trend line, and then we rally higher, and this candle there, which is the low, the open, the close, and the high, has solidly broken the trend line. And there is a rule. We cannot break that rule. Okay, you have to pay attention. Welcome, Roman. That we are making lower lows and lower lows. So this is a trend line. Even 1 pip would make the trend line draw like this. If we hadn't broken that area, overshot that area about 1 single pip, then we are not allowed to draw this as a peak. Okay, we need to break that area by 0.1. I mean the minimum distance for a pip. So this is valid. The trend line is broken. Now that doesn't mean that we are in an uptrend. We are in consolidation. So once we do have 1 area of supply and 2 areas of supply removed, as you can see there, then we do have an uptrend. But that doesn't give us permission to do this. This is not possible. Why isn't this trend line possible? Can anybody tell me? I mentioned it before. What do we need in order to draw a trend line? A valid trend line. We need 2, yes, that's it. 2 valleys. 2 valleys. And remove supply. So there it is. This is a trend line break, and then we do have 1 valley here, there. This is the V shape, okay, as I'm pointing with my pointer. But this is not a valley. This is a rally base, rally base, rally. This is a CP pattern, continuation pattern. We don't use the continuation patterns in order to draw a trend line. Okay, it needs to remove either 2 opposing supply areas or create a valid CP pattern, a valid valley, 2 valleys. So on the way up, since the trend line is broken, then we take levels of demand, CP patterns of demand. If we have hit a higher time frame area, which is here, we hit the lowest low in history, and then prices start rejecting, so we are allowed to trade long now, because now the trend on the monthly is changing. So on the daily and 4-hour and intraday, you will be having trades all the way up. Okay, that's the idea. But that's another thing. That's looking for trade setups, and we are trying to learn here how to mechanically draw a trend line and supply and demand zones, because that is the key. I mean, that is the wireframe of the strategy. If you don't know how to draw trend lines correctly, if you don't know how to draw supply and demand zones, CP patterns, then the other rules are useless, because you need those two basic concepts to be really in your mind and learn them by heart and practice a lot in order to be proficient at drawing them. Okay, so Jack is asking, Alfonso, when a complete candle breaks the trend line and then subsequently another candle forms and drops below the trend line, based on the rules, what can we do? I mean, if this breaks the candle, the trend line, and then this one drops down there, Jack, right, the next one. Below the trend line. I mean, if it drops below the trend line, then you have to assess this. I mean, Jack, this is demand area. Why is it demand? Because it broke trend line, it removed supply there, and now we do have a valley. So this is an area of demand. So when price drops down there and it breaks that trend line and then subsequently drops into that area, this is demand. You cannot sell. You have to wait. If there's a great level of demand there on the daily, 4-hour, and all that, then you take it. If there is not, then you wait to go long, but don't go short, because you could be selling against higher time frame demand area. You have to wait for this to be broken, or for a brand new area of demand there, or if it exceeds already and it's great, then you take it. Is that understood? That's always the same thing. Do not try to sell into higher time frame demand areas, and do not try to buy into higher time frame supply areas. Chris is asking, say that again, please. What allows you to trade long on the way up before the uptrend is confirmed? The CP patterns class, Chris. Okay. Now price, the trend line is broken on the monthly, and down we rally there, and on the way up we will have daily levels of demand and 4-hour levels of demand that you will treat with the daily trend lines rules and the 4-hour trend line rules. So let me show you an example here. So let me try here. Let me see what happens here. Okay, this is a vertical line, and this is supply there. Okay, let me do this. Let me change this to another color so we can see the lines. There it is. Yeah, I will scrunch it up here. Is that better? So this is a monthly. So the thing is that we do have this hit down there. So when price starts rallying from there, yes, Chris, consolidation on the monthly allows to trade in both directions. Yes, if you have the daily trend. Okay, just try to trade with the daily trend always. So let me look at the daily here. Okay, now I have to use there. So look at what happened here. Okay, so here we hit that area of demand on the monthly. You see it dropped there, and what happened there? It dropped down there, and look what happened here. The daily trend line. We've got a peak, another peak there, another peak there. So we connect the latest peaks there. There's the peak, and then we do have 1, 2, 3, 4 CP patterns. After 3 CP patterns, there is a rule that says that you are allowed to draw an aggressive trend line. Okay, this is very, very, very important. Okay, this is an aggressive trend line, and this aggressive trend line will be taken into account if and only if we have hit a higher time frame than the time frame where we have detected the 3 CP patterns. So when we hit that area down there and we break the trend line, then all these areas become demand. As you can see, this demand area removed the supply, and then the supply and the supply. 1, 2, 3 areas of supply removed. And what caused the removal of all these areas of supply? Can anybody tell me? What did it cause? What area did cause the removal of all these areas, which were great? But if you try to sell here, you would be trying to sell against higher time frames demand areas. What does it mean? That you have lower odds. You are selling into higher time frame demand areas, and that is not higher probability. That is not a sound strategy, and you will be doomed to failure. As simple as that. That doesn't mean that these levels could work. Of course they could. This is all a games number. Okay? So you just play the you just play the game. But try to play the game with as many odds on your side as possible. So Hugh is saying the CP demand zone was the cause, and the origin of was the lower drop base rally. So look at this over here. This is the extreme. Okay, right there we do have the extreme. Then we do have another CP pattern there. Okay, so when you look at that, what is the cause of that whole rally? This one is the origin of all that. This one also removed areas there. Okay, but once we hit that area here, we've got a weekly area of supply, so we are not going to enter into that discussion now because a more advanced thing, but it's all the same thing, because if we hit a weekly area of supply there, we are not allowed to trade in the middle. We have to go to the extremes. Okay, so, and this webinar is about drawing trend lines and drawing zones. Okay, drawing trend and zones. So we can't cover all the strategy in 1 hour and a half, 2 hours. Just impossible. So but I just want you to know and to see what is going what is going here. What is going on here? Elad is asking if I can repeat the aggressive trend line explanation. We are allowed to draw an aggressive trend line when we do have 3 or more CP patterns. This is 1, 2, 3, 4. If you take all these as 1, this is 1, 2, and 3. That's the rule. Okay, so here, same. 1, 2, 3. The trend line will be this. Okay, but did we hit a higher time frame area of demand? I don't think so. So price kept on dropping until when? Until it hit a higher time frame area of demand, which is down there. And that's it. That's why this is being working like that. Okay, so let me go back to this. You're welcome, Elad. So, since this is the extreme, and we hit there is a supply area there on the weekly. All this is a weekly area. Okay, a lot of trading here in the zone. So do not try to buy against that when price is dropping heavily from there. Do not try to do that. Just wait for a confirmation here. CP patterns are great if we have not hit a higher time frame area of supply, and there is a weekly area of supply because of the numbers of candles there. So there are more than 5-6 candles. There is a weekly area of supply. CP pattern on the weekly. So if the CP pattern is the weekly is down and the CP pattern of supply here is holding, do not try to buy there because you will have probably lots of losses. So wait for the extreme, but on the way down we will have intraday trades. Okay, now we are waiting from the extreme that price drops there and then that level holds and then rallies, and it rallies all the way up. Okay, so what I'm trying to see here as well is that these things happen a lot. Okay, these things happen a lot. What would we have had a loss down there if we wanted to buy? The level is broken. Okay, yeah, here, but I'm waiting for others to say. Chris said no. What good prevent us from having a loss here or not? What do we have? What parameter are we using on this strategy in order to avoid this overshooting on the levels? We have the, yeah, everybody's saying it, the wiggle room. So for a daily level, we want, on a major, we want at least 25 pips of wiggle room. Minimum 25. And if you've got level on top of level there, try to go to the extreme or add more wiggle room or wait for a confirmation. That's all you can do. There's nothing you can do. The wiggle room will protect you. So here, from there to there, we do have 13 pips. So that is not a loss, because we would have had our stop loss right there. And that happens a lot. Okay? So as you can see here, the price did not close underneath that level. We are into higher time frame areas of demand, and that is a signal for many other traders that trade support and resistance, and this pink candle will trigger an entry for them. Okay, and this is what happened, but this is not what we are doing here. Okay, so we are trading supply and demand zones and not candlestick patterns as they close. That's another thing. So now price rally from there, and we start having another trend line. So we do have this valley is obvious, as you can see. Okay, isn't this valley obvious? A drop, a base, and a rally, and now a drop, a base, and a rally. So now we do have another trend there. Okay, do you understand why we do have that trend line there? So now that level has been working, and now we do have another level there, which is the origin of it all. Okay, so now we do have this trend line, and this is a CP pattern, and this is another CP pattern. So we do have 1, 2, 3 CP patterns. Okay, 1, 2, and 3. So once we do have 1, 2, and 3, then this is what we have: a more aggressive trend line drawn, linking the 3 CP patterns. Okay, once we do have another valley created on the daily, then we join the previous valley, okay, there, with this valley, the origin, this valley, and then this valley, and this could be easily a weekly area, a weekly, 2 valleys on the weekly. So now we do have a drop, base, and a rally. Drop, base, rally, base, rally, base, rally, base, rally. What is this? Is it overextended or is it not? Do we have more than 3 CP patterns of demand? Yes, we do. So once we do have more than 3 CP patterns of demand, we draw an aggressive trend line. Okay, that will, this CP pattern area worked for some time. It even gave 100 pips. Okay, but we have to see what is going on here on the left, but we are not doing that. Okay, now we are just trying to show you how to draw trend lines. Okay, then on another webinars we will see the interrelationship between all different time frames and how they all link together. Okay, so now this is the trend line. This is what we have now: rally, base, drop, rally, base, drop, 1 CP, 2 CP, 3 CPs. So first of all, we would have this trend line. Then, since we do have several areas, CP pattern supply zones, we've got one area there, but this is a peak. So peak and peak, we join, drop, base, rally, so drop, base, drop, base, drop. Okay, so now we do have 1, 2 CP patterns, 3 CP patterns, and we do have another peak there. So we join and make a more aggressive trend line. Okay, he was asking, would it be wise to not buy highest CP demand zone after 3 CP trend line break or overbought and market needs to sell off? Yes. So once we do have this overextended period, buying CP pattern is not a good thing. A CP pattern is good at the beginning of a movement, not at the end of a movement. We don't know if it is at the end. Let me correct this sentence. After a big imbalance in price, after a lot of buyers have been into the market and price is overextended with CP patterns, that means that the spring, I mean, it's overextended and it will snap back to the origin once price starts to sell off. And this is what happened. It went right to the origin of the whole imbalance, right down there, and then price rallied again. Okay, so once we are too high in the curve, once we have more than 50 patterns, once we have many CP patterns in a row and overbought and overextended, price will normally revert to the mean and will snap back to its origin. So you should forget about any CP patterns on the way up and try to even go counter trend once you do have a trend on the daily. And there I'm sure that we're 4-hour trades on the way down, but we are not into finding trades now. We are trying to show you how to draw trend lines and areas of supply and demand. Okay, like Chris said, a break of the trend line invalidates CPs. That is one of the rules as well. Post number 1, remember that. It's all there, but it's very easy when me or somebody else shows you a chart, but it's not easy when you have to do it yourself. This is why I encourage you to test and test and test, not for 1 week, but for months. Not this strategy, but any other strategy. Do not believe what I do or what I say. Yes, believe what you do and what you test, not what me or somebody else does. So John is saying, okay, unless a flip zone has occurred. That's true, John, but that's another lesson. Okay, so I'm just trying to draw all the trend lines right now. Okay, so we're going to concentrate on the first part of the this webinar. We're going to concentrate on the trend lines. So you will be able to review this video over and over and over, and then on the second half we're going to concentrate on drawing levels. Okay. Philippe is asking, 250 moving average is used widely in the markets to determine the mean. Yes, maybe, Philippe, but we are not using that. I mean, you can use 250, 150, 20, whatever. I mean, those are lagging indicators. That's all. So if you want to use that EMA or moving average, you have to conduct hundreds and hundreds of tests in order to get a rule. So you want to use that one, use it, but test it. Okay, it's not part of the strategy. The only one which is part of the strategy is the 20 EMA, and we use it as confluence. It does not, 20 EMA does not negate a trade and does not give you permission to take a trade. It's just a way to confluence, to have another odds enhancer. That's all. But we could easily remove it. It's not useful. Okay, but only as confluence. So now that we do have this drop in price, okay, now we hit this area there of demand and all that, and we start to rally. We got a drop, base and a rally, base and a rally, base and a rally, and then we've got several areas there. So now that we do have that, we will not be able to draw a trend line until we are right there. 2 valleys. But on the way up, we do have 1, 2, 3 CP patterns. So on the way up, we will be able to draw that as aggressive. So that invalidates this level. Well, this level is not a 2-to-1 level, so the basing is not good. It was overshot a little bit. So if anything, you wait for confirmation, but not a set and forget type of trade. Down there, yes. Down there, yes. It's the extreme and value levels. This one level remove 1, 2, 3, and even 4. Okay, but there we stayed there. Price dropped from there, and then once we drop down there, flip zone on the daily. Yes, Hugh. So there now we rally higher, and now we do have one valley composed of several CP patterns. It doesn't matter. We've got a V shape, and then we've got another V shape here. So we are allowed to take this one. Okay. So we draw this V shape. First leg basing second leg. First leg basing second leg. The second leg made a higher high than the first valley's second leg. That provides the possibility of drawing a trend line. And this is what happens. Okay? then there's a CP pattern there that would have been a trade there, okay? But and then price drops down there, and we are now allowed to do this. Remember, we are just drawing trend lines. We are not looking for trade setups or anything, okay? So there we have, okay? Now we do have this valley and then this other valley. And once we do have, we always have to connect the latest two valleys or three CP patterns on the daily, because when that changes, you will have to wait for price to drop lower into higher time frames areas of demand, or go counter trend if you are a counter trend trader, okay? This is the way it works. So if you do this, okay, is this a valid trend line? I'm asking. Look at that. Can anybody tell me? Is it valid on the daily? Yes, everybody is saying it. It is valid. But as per the rule, is it valid as per the rules? It is not valid as per the rules, because the rules requires that you connect the latest two valleys. Latest two valleys. This is not a daily trend line. This is a weekly trend line. Let me switch to the weekly. So after all these valleys that we have on the daily, this will be a weekly trend line, and we are not interested in the weekly trend lines on a daily time frame. We are interested in the latest movements that we do have on the daily, because if the trend line in the daily is broken for the last two valleys, that means that the daily is changing dynamics and will probably start selling off and reverting to a higher time frame area of demand. So stop buying. It is overextended. Okay? Hugh said, this is the point you taught me this morning on gold. Yes, exactly, Hugh. So there, this is what we have. So let me switch to the weekly time frame and see what happens there, because I guess this is a weekly time frame. Weekly, but let me do this. Let me switch this trend line so that we can see it on the weekly as well. You see what I mean? This was current price. You see that this area, this trend line, you see, connects these two lows in the weekly. This is a weekly trend line. This is not a daily trend line. You have to be very, very, very careful with that, because the rules tells you very specifically that you have to connect the latest two valleys. So this is not valid. Okay. Now we do have solved the trend line. You see it beautifully. I mean, it's working really nice, but it is on the weekly. So if it is on the weekly, this is not a daily one. So you have to wait. If it breaks on the daily, then you have to wait, like here. If it breaks on the daily, then you have to wait for lower and see what happens. This is the break. This is the area that removes the trend line, and the price starts dropping. Another area drops. Another area there about then drops. Okay, and where does it go down to? Where? If you were maybe using this trend line, okay, you would have bought probably on some areas over there, okay, or even a line like this. Okay, look at this. Is this valid on the daily? Yes, of course. I mean, it's great. Look, it's great. Look at that valley and another valley. But is this a daily trend line? It is not a daily trend line. This is a higher time frames trend line, not a daily trend line. So you have to play with that. Okay. So once that, look at this overextension in price. Okay. Price reaches that area there, okay, and it's overextended. 1, 2, 3, 4, 5, 6, a lot of CP patterns. So this is overextended. If price may have hit a higher time frame area there, but we are not looking at that right now, okay. And then price drops heavily. Okay, it drops heavily there. So all these areas that are down there, all of them, absolutely all of them are negated. All of them. This is compressed demand here, compressed, everything's compressed. And there's no real great imbalance. The only great imbalance was there too high, there it didn't work, there it worked for some time, and here not that great. I mean, this is two ERC candles there, another one, it worked for some time, and it was the reversal. So Hugh is saying conventional trendline analysis teachings do not make this point clear. So this is very valuable as we get to see change in market dynamics much sooner with the last two valleys. Yes, but the disadvantage of this, because there is always pros and cons, Hugh, is that you have to add other time frames. It is great to trade with a monthly, a daily combo, or the weekly 4-hour combo, but once you start adding trend lines where you connect the latest 2 points, you have to be referring as well to the weekly and to the monthly. So many of you that are part of the private community know about the realignment type of trade, and now we introduce the wow trade and type of trade with the trend lines and all that. You know that we have to we have to connect all these trend lines and the time frames in a sequence. So, but this is a more advanced thing. So what I'm trying to say here is that this is a daily trend line. These two latest, this is a valley and this is a valley. These are the two latest trend lines. So once we do have that on this 1 CP pattern, 2 CP patterns, 3 CP patterns, this is a more aggressive trend line. So you are not, this is already touched, so you are not allowed to trade areas that are already non-fresh. So this is not a trade. This is not possible to trade there. It is not possible to trade there because it's also, the trend line is broken. So you avoid 1 loss, 2 losses, 3 losses. You avoid lots of losses on the way down because you drew the trend line correctly. If you draw the trend line like this, which is the weekly, then you are in trouble because you will have all of these losses on the way down, believing that still the daily trend line, the daily trend is up. But the daily trend is no longer up. The daily trend now is over because it removed 1 area of demand there and 2 areas of demand. That means that we have now a downtrend on the daily, which is trying to revert back to the mean to higher time frames areas of demand. Where? Somewhere over there. Okay, but I'm not going to enter into those things. Let me see what happened there just for a little while there and there, 2 reactions. Okay, so the first reaction there, look what happened there. We did have a CP pattern of demand on the weekly and then reacted there. And then here we did have another CP pattern of demand on the weekly. And those are the 2 areas where price reacted. On the daily, you cannot see it. You see that? On the daily, you cannot see it. But they are there, always. Okay? Because price is fractal. So those areas, let me do this. Rectangle reader on the weekly, I'm gonna say here like 3 zones. So see where price reacted to in the beginning. Reacted to this weekly area and reacted to this weekly area. So when price reverses to the mean, it will go down and drop, in this case because it's demand, it's an uptrend, it will try to revert back to the weekly area of demand in control and then to the other weekly area in control. You have to wait. Okay, if there is a great level of demand like here, then you take it. Okay, this is the daily. If there is a great area of demand, if there is not, you wait for confirmation. This is a trade. And there was another area there on the daily. Okay, and there you could have had a loss. Okay, it was overshot and then it worked, but it was a loss. Okay, if you try that instead of forget, or you can wait for confirmation, but otherwise it would have been a loss. But then if you look there and wait for a confirmation, this is a trend line broken now, then look at this area there, it rallied, confirmation type of trade, brand new area of demand on the weekly area, and then rallied there, pull back, and there's a trade. You had a loss there, but who cares? Now you've got a trade that ran 500 pips. I'm not saying you're going to get 500, you're going to get less, I'm sure, because you will be scared most of the time and you will exit before. But I'm just trying to locate these trades, okay? So this is the way it works. So let me do this. Delete all the objects. There. Philippe, do you counter trend as set and forget on fresh and original zone, please? I used to do it. Now I'm waiting for confirmation because many times you have to be, the look of those levels have to be very, very specific. So I'm now concentrated on trend trading instead of counter trend trading. It's safer and more profitable. Okay, it's great to look and find and ride a reversal, a turning point in the market, but getting those is more difficult, so I concentrate on trend trading. That's me. You have to choose. Okay, so any doubt about how this trend line thing works? Okay, we are not looking for trades on this webinar. We are trying to show you how the trend line is painted, how it is negated, and all that. This is not a webinar to find trade setups. Jim is asking, can you please explain how to get the confirmation from weekly and monthly chart? Simple, it's on the rules, Jim. You wait for brand new areas of demand on the daily, on the 4 hour. That's all. Brand new areas that confirm that there is interest in that zone. So like we saw here, this is a typical confirmation type of trade. Okay, there we do have one, this is one, don't we have here one CP pattern area of demand, which is also a flip zone. Rally base, rally base, rally base, several CP patterns of demand. So we are allowed to do this. Are we allowed to set and forget there on that level? We are not allowed to do that because it's a CP pattern against the weekly trend has been broken. And this same thing applies to any time frame. Price is fractal, levels are the same. Okay, so if I am not sure about that level and the rules are broken, but it's still you see that this is a big trend up, the monthly trend line will be possibly this one. Okay, let me see, and let me draw it orange. But remember, this is not the weekly trend line, this is the weekly trend line. So let me see, you see, there it is. So this is the monthly trend line. So the monthly is up, the weekly is up. So what do you want to do? You want to counter trend? Yes, you can counter trend, of course. There are rules for that. But on the way down on the daily, then you will have trades to go down there. But once price is very close to this area of demand on the weekly with the monthly and the weekly up, stop selling, because if you try to sell there, you are going to have lots of losses and you will never be profitable. Okay, so confirmation on the weekly and the monthly, because somebody you asked it. Okay, who was Jim? Okay, Jim asked that. So simple, you locate a zone, a higher time frame zone with the higher time frames with you, but the trend has been broken now and you wait for confirmation. Okay, no problem. I mean, look at that, you wait there weekly, there it is. So there we do have the trend line, aggressive trend line there. Okay, hit area of demand on the weekly, and we've got brand new area of demand on the daily. This is one of the confirmation type of trades. The daily on the 4 hour, you can also wait for a 4 hour confirmation type of trade. I don't think there will be, I don't have history in the 4 hour there, but I'm sure there was a 4 hour level there that you could have used to make a lower dollar risk entry instead of well, it's 40 something pips, it's nothing. So this is the kind of confirmation type of trade, Jim. He's asking also, if it breaks trend line on weekly chart and daily trend line is still up, can we still take the trade? If it breaks the trend line on the weekly chart, I don't think the daily trend line will be up, Jim. If the weekly is up, trend line is a weekly trend line, okay, is broken, I don't think that the daily will be up. It's impossible. because the weekly is a bigger time frame than the daily. That cannot happen. Okay, unless you want to ask something different, but that is impossible. So he is asking, in my experience, valleys or shaped reversal are very rare. I find it valuable to wait for a trendline break on higher time frame areas, as price invariably accumulates, distributes at these higher time frame levels. Yes, may miss the odd very fast departure, but rare. Yes, if you wait for a confirmation, you will miss sometimes some trades, but you will be safer. But that's something you have to put in a balance. You have to say, okay, I will wait for confirmation, and if I miss the trade, I miss it. But then if you see the trade rallying, and then you say to yourself, oops, I missed that one, I missed the other one, 2, 3, 4 misses. But what you don't see is the trades that the losses that rule prevented you from having. That's what you don't see, because your ego wants to see only the missed opportunities, not the ones that have been working. That's it. Jim, if it breaks trendline on weekly chart and daily trendline still up, can we still take the trade? But still up, I mean, it can be, I mean, Jim, it can be still up. Another thing is that the weekly trendline is broken, and then the daily starts like this. On the weekly is broken, and then the daily starts with a new trendline. But if the weekly is broken, which is this, what you're asking is physically impossible. If the weekly is up and broken, it is impossible to have an uptrend on the daily. It's impossible. Unless we hit another area and then we start rallying again and we get a new trend. But it's just impossible. The weekly is a bigger time frame than the daily. It's impossible to have those two trend lines converging. Chris is saying preventing the losses are the most important. That's it. I mean, there are 4 types of trades really. Big losses, small losses. Big winners, small winners. And what we are trying to remove are the big losses by preventing them with the wiggle room and the stop loss, and the small losses by having these rules. So getting into a trade is very easy. Exiting is the difficult part. Okay, so these rules allow you to filter bad trades and concentrate on the good trades. He was saying, but can still get a daily uptrend to valid while price is still below the weekly ascending trend line. I mean, yes. I mean, like in this case, this is a weekly uptrend line, and then on the daily, it only happened there, but after a long time. Jim is asking, I mean, the new trend, can we still take the trade when the daily is up? The new trend, which new trend? On the daily? You have to wait for the daily. I mean, on the way down, there will be trades on the 4-hour and the daily. But if you want to trade with the daily direction, you have to wait for the daily direction or wait for a confirmation type of trade. Oops, I think I hit the wrong button there. Okay, right there. Yeah, the weekly, I mean, the weekly is not down. I mean, is the weekly here? We do have one area of demand removed. Now the weekly is considered down, but we hit an area of demand on the daily, on the weekly, sorry, at a flip zone, previous resistance becoming support. We get a confirmation type of trade on the daily and 4-hour for sure, I'm sure, and then rallies, and you get a trade. So that's the way that you have to trade. On the way down, you can trade intraday or whatever you want. Even more when this area has been removed there. There's a lot of potential there. But that's the way it works. Okay. Question about wiggle room. Chris is asking, if the 4-hour and daily zones have them made the same distance and you are trading the 4-hour, do you add the daily wiggle on 4-hour? The 4-hour is smaller, so less risk. I always have different wiggles for the 4-hour and for the daily, because if imagine is the 4-hour level within that zone on the daily, there's a zone there. The zone there on the 4-hour is 20 pips. Okay, let's say it's 20 pips, and I add 25 pips or wiggle room, then I'm adding more wiggle room than the zone itself. So you are adding more width to the level, so the lots are lower and you need more profit potential in order to have a 3-to-1 or more for an exit. So I just have my wiggle room for the 4-hour and my wiggle room for the daily. What I do normally is when I do see a lot of wicks like there, I will make my wiggle bigger, but I have to see it. But by default, it's always the same. A wiggle room for the 4-hour, a wiggle room for the daily, a wiggle room for the 1-hour. You have to have those settings. Otherwise, you will be thinking too much and saying, okay, this time I will add more, this time I will add less. Once you start thinking, it will create indecision and confusion, and then will prevent you from pulling the trigger. Menno is saying you are very good in stuff. In this stuff, I don't think so. I'm just doing things mechanically. Do you make still from time to time mistakes? Not from time to time, always. Or is this to forget? Those monthly or weekly flip zones are tested. What do you mean with that? I know that's another question by you. Okay. Or no, I make many mistakes. People that are members of the Set and Forget community, I mean, they are aware. I mean, I have many losses, and we will always have many losses. Always. These are rules. You are playing the numbers, playing the game, the game's number. Sorry. That's all. I mean, the strategy is not perfect. No strategy is perfect. You just play your odds. Welcome, Elad. Have a great day. Yeah, webinar is recorded, yes. Hughes asking, price goes back to the flip zone like a magnet. That's what I mean by test. He was saying the monthly and the weekly flip zones are tested regularly and good for corrections on daily time frames. Noticing that more and more since you pointed it out. Yes, that's it. But that's another type of trade. You know how all the rules are there. You have to wait for confirmation. It happened on gold. It happened many currency pairs lately. It's always the same thing. So let's continue with this. Let's make a 5 minutes pause, and then we'll be back and we'll continue with drawing the levels. Okay, just give me 5 minutes of break. I need to drink some water and stretch a little bit. Okay, thanks a lot. So on this, hello Bechamel boy here. Hello Gary. So let me delete all these objects, and now let's start with the second part of this webinar, to draw levels, mechanical rules to draw levels. Okay, so let's try and concentrate on the last areas. Okay, it will be easier for the rectangle radius indicator to show you the reactions and all that. So let's start from down there, for example. Okay, down there, from there to the right on the daily. Okay, so here we do have something. We do have a drop, a base, and a rally. We've got 3 basing candles. The rectangle radius indicator now provides you with the opportunity to have 50% candle. That is a dot, a white or black dot that shows you if the candle is a basing candle, and that is measured from the distance of this range from the high to the low, and if the body of the candle is equal or lower than 50% of the whole candle range, it will be a 50% candle, and that is a basing candle. Not all 50% candles are basing candles, and not all non-50% candles are basing candles. So you have to analyze the level and see where it is located. Okay, because as you can see here, price drop, base it, and then rally. Welcome, Nick. So here, this is what you have: a drop, base, and rally. So what we do, this is what we call a bullish engulfing pattern. This is a classic pattern. So when we do have a bullish engulfing pattern, that is a bullish candle engulfing at least previous candle's body the wicks are not needed to be engulfed, to be covered. Okay, yes, the open and close, that's the only need, the only thing we need. Okay, once we do that, we look left and locate all the basing candles, and if the candles to the left are basing candles and they are within, the open and closes are within this candle range, the first candle on the left, so the level is exactly like that. From this highest open covering these three candles, that is would be exactly the level. This is the lowest low in the zone, which is the fractal swing low. An indicator, the indicator provided with the strategy allows you to do that, and it was a reaction to this level, but we don't care about that. So here, what we do have, this is a demand level, but is it tradable? Now that price is there, that's another rule, because now the daily is down. So you should, and this level did not remove supply, so this is not a valid area to trade long if price retests the area. Okay. Hello, Bobby from Indonesia. Welcome. So you understand how you will be able to watch this webinar, and you will see the rules exactly. So those were defined there. So there, this is the same thing as this one. This is a bearish engulfing pattern. This is a drop, base, rally, and a drop. So here, this is a CP pattern. This is a drop, base, but the base is an engulfing pattern. So what we do have here, this could be a CP pattern. You can consider it a peak as well. It's in the middle there, okay? Because this one candle there, but we don't have a basing. So for a B shape or an inverted V shape peak of valley, we need at least a basing candle. But there we don't have basing, so this is a CP pattern. So there, the rule applies. Same rules. This is a bearish candle. This candle engulfs the previous candle on the left, the body, from the open to the close, and closing underneath. So we look left, and we see if the whole candle range there contains another candle on the left. There it is. So this candle is also part of the base, but it is within the range. So we take the highest high of the zone, and then the previous candle open, in this case. Open, close in the same range. So they both match, that is the level. That is the way it works. Okay, now price drops again. Okay, it removes this area. Rally base drops. So this is a harami. Okay, this is not, it could have been an engulfed if we remove that, we engulf that area, that candle. But I didn't. It could have been what we call a dark cloud cover. I didn't invent these names. You have to read Steve Neeson books in order to learn about this. But just 5-6 patterns we are taking into account for drawing the levels. So there, rally, a base, and a drop. So the level would be exactly like that. Because this candle there is not a 50% candle, as you can see. It doesn't have the dot, and also it closes below the previous candle's low, so that candle is rallying away from the sellers, from this reaction, okay, from this supply area. Now price drops, and now that price drops, we do have the possibility of drawing. First it was this trend line, now it is this trend line, this peak from here to here, because this is a CP, and now this is the trend line. That was a valid trade there. Okay, no, so now is this an area there? Is this an area? Let me do this. Let me delete all the objects. Is this an area of supply? As per the rules, we would draw like that. Okay, but is that an area we should draw, or is it valid? And if it is not valid, why is it not valid? Because many people, when they see 100 pips drop, they will say this is supply. 100. They see a red candle, it's like a bull following a bullfighter's close, the red close or capote. Okay, so was even a retest there. It didn't take out any demand area, so this is not valid. So the area in control was this area. Okay, now it hit that area, price stayed there, and now it removed that area. Okay, what is the area that was caused the removal of that area? So now we do have this base in there. You see there? So drop, base, rally. We are not taking into account, we are not looking for trade setups, okay? We're just doing this to draw levels mechanically. Okay, Philippe is asking, do you have a max number of pips to risk, please? No, I don't have. No. The zone is the zone. I need 2-to-1 imbalance. I need 3-to-1 at least for the exit. So I need 4-to-1 profit margin for my 3-to-1 exit. So the level is the level. So the pips, the lot will be adjusted as per the width of the level and the wiggle room. The loss is dynamic. Okay. John, you should pay attention. John Buckley, pay attention, please. Pay attention. Somebody's calling you. So don't fall asleep, John. You always trade 1%. Okay, you trade 1%, and that is all the risk. So the percentage is adapted as per the width of the level, and that's it. We don't care about 50 pips or 50 or 100 or 200, because if you trade exotics or gold or S&P or Nikkei index, sometimes the levels are 20,000 pips wide, but the pip value is 0.0001. So you just adapt it. Okay, so now we've got a drop, a base, and a rally. And what is this pattern over here? We have already described it before, because the levels are composed, most of the time the levels are composed of 5-6 patterns. I mean, on the bullish side we do have bullish harami, we'll have piercing patterns, which is the opposite to the dark cloud covers, which is the bearish, and we do have engulfing patterns, and that's all we have. We do have 6 patterns. If you learn those, you've got all the basics. Okay, so this is an engulfing, bullish engulfing pattern. This candle engulfs the previous candle close and open the body. Okay, open close. So this is a harami there, because it couldn't make 50%. For a piercing pattern we need to pierce at least 50% or more, and for the dark cloud cover, which is the opposite, the bearish one, remember that there are just 6 patterns, no more. You can buy a book by Steve Nissen, he's the master of the candlesticks. So this is a harami followed by an engulfing. So this is a powerful area. Okay, so the level would be exactly like that, as per the rules. We look left, first candle, this is the candle range. Is there another basic candle on the left? So we take the highest or the closest of the highest one. It can be the close, or it can be an open. It doesn't matter. So there's a trade, and we missed that trade. Okay, but what do we have here? Rally, here a drop, a base, and a rally, then which made a high. So there we've got another level. This is an engulfing pattern as well. Okay, another harami, another engulfing, bullish engulfing pattern. We look left, and the candle range is from here to here. Do we have other candles on the left within that range? Yes, this one and this one. We couldn't close above, so that is the level. Exactly like that, mechanically. And that is the trade. Okay, was it a loss? No, it was not. 25 pips. Okay, so now we delete that zone. This is, I believe, 85 or 60 from here to here. Yeah, this is a piercing pattern, 50% penetration. Okay, so drop, base, rally, and then this is the level. Now rally, base, rally. This is the level. Okay, so this is the way to draw it. Now let me remove all this, because otherwise this one, Leo is asking, did that lowest level take out a supply zone? I don't think so, but the thing is that this could be, if we have hit a higher time frame area of demand, we are just drawing. I'm just trying, Leo, I'm just trying here to draw, to show people how to draw levels in a consistent way. We're not looking for a trade setup. So, but let me see, because it does not need to remove opposing area if we have hit an opposing area of supply or demand. So there it is. We are within that area of demand on the monthly, on the weekly there. So we are low in the curve. So if we create a new area there, it is a tradable area. I will be trading that. Yeah, but I'm just trying to show people how to mechanically drop the levels. Okay, so we have covered all this. Now this is what we call, this is a dark cloud cover, which is the opposite to the piercing pattern, which that means that this bullish bearish candle needs to pierce at least 50% or more than the previous candle open close body of the candle. Okay, if it pierces the 100%, then we've got a bearish engulfing pattern. If we pierce 50% or less, we have a dark cloud cover, and if it does a small penetration with the base, it is harami. So that's the only three patterns that we have to learn, and the opposite ones are for the demand areas. Okay, so now we do have this drop, base, drop. So first of all, this is the level as per the rules, the top one. Okay, this is a dark cloud cover, and then we do have this level of supply, two basing candles. Okay, and this one close underneath there. I normally take, for the CP patterns, I will normally take both of them. You could make it lower like that, because this candle close underneath that open, that close, but I will normally take both. Okay, there are two basing candles, unless this candle closed underneath that previous candle's low, but that didn't happen. So now drops, and this is another harami. Okay, so you take the whole basing area. And now it drop, base, drop. This is a potential area of supply, but it doesn't happen anything there until we'll remove that area. So now we do have this bullish bearish engulfing pattern. So this candle, this bearish candle, closes and engulfs the previous candle's body. So this is a bearish engulfing pattern, and that is the level. Okay, correctly painted. We look left of that candle and see we have another candle, an inside candle within the previous candle's range. So that is all part of the range. Okay, so now we do have this drop here, rally, base, drop. So we do have another level there. Remember, this is just drawing levels. We need to assess if the levels have removed previous areas of demand and how low or high these levels are located according to the curve. Okay, so here we do have peak, 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 and then we are allowed, after 2-3 CP patterns, we are allowed to draw a more aggressive trend line like that first, and then like that. And when we hit an area of demand there, we rally again, and we break the trend line. But that's another thing. So let me continue drawing the levels. Now we do have a drop, a base, and a rally. This candle engulfs this base, so this is what we have. Almost hit. Okay, when we do have these weak candles and the level is so small, what I normally do is I make it wider. Okay, but that's a personal decision of mine. Okay, because I've seen this working over and over and over. So when I have a small level, I will make it wider, but manually. But the mechanical way is doing that. So now we do have a drop, a base, and a rally. And look at this. This is two basing candles, 1, 2, and then a gap, and fill gap. So we do have this level there, painted right there, like that. Now we do have a rally, a base, and a rally. Okay, and then we do have this level over there. This is a CP pattern. Now this is not nothing, and then we do have here a bullish engulfing pattern. So this is the level. We look left, first candle, this is the whole range, and all these candles are within that range. This one is outside of this range there, so we don't take that into account. And then we do have a rally, base, and a rally, and then this is another level there, and then a level on top of level. Rally, base, rally. Philippe is asking, you can trade daily only and being profitable. Yes, you can trade it, and it's really, really nice. Okay, it's very powerful time frame. So here we do have a rally, a base, and a rally. This is a CP pattern. How many candles do we have as a basing? 1, 2, 3, 4. So these, all these areas, all these candles are basing candles. So we take the lowest low and the highest open close of the zone. Okay, there it is. It is also an engulfing pattern. Okay, but when we do have these candles being within this range on the CP pattern, then I will draw like that. You could also draw the level this time twice in two different ways. Why? Because this is also bullish. Sometimes you can have two possibilities. So I always take this one. Okay, try to do that. Otherwise, many times we'll drop there, I will miss the trade, and I will be hitting my head against the wall. So this is a bullish engulfing pattern. It closed and engulfed this previous left candle. We look left, the range is from that high to that low. So we look left and we see that this candle is within that range, and that candle open above that range. So the level, okay, that level could be, would be that. Okay, because this one broke the pattern. But when I see that those levels, and this is all about being practicing. I mean, this is all about practice. This is why you have to practice for months and months, because you will only be able to draw the levels one way or the other if you have drawn the levels not 100 times but 20 and 40,000 times. That's the way our human brain works. So if you want to go against that, it's up to you. It's how the brain works. I didn't invent that. Okay, I wish I was a robot, but I'm not. Okay. Nick is saying, I am so sick of drawing the levels, and he laughs. I'm too, but trading is boring. I mean, because the rules are always the same. What you have to be is patience, because if you are impatient, then the boring thing will, your ego will try to overcome your decisions and will say, this is too boring, I want some activity. And then you will start chasing the trends, drawing the levels more aggressively, and taking the trades against the higher time frame areas and all that, because you are being impatient. So if you trade the daily and 4-hour combos for a swing trade, for a living, or as a paycheck, if you are patient, you will have the trades there. Just be patient. And you will only learn that by practicing for months and years. This is not something you're going to get in 2 months time or a year time. This is going to take a lot, unfortunately or fortunately. Leo is saying trading is boring if done right. Correctly, yes. Patience is bitter, but its fruit is sweet. That's what John said. So here we do have another level. Remember that we are trying to draw the levels in a very mechanical way by detecting on the chart 6 patterns, only 6 of them. And for the bullish side, they are the piercing pattern, the bullish engulfing pattern, okay, and the haramis. That's all. And for the bearish side, bearish engulfing pattern, harami, bearish harami, and piercing patterns. We don't need anything else. All the charts are composed of those, all of them, all the charts. So here we do a rally, a base, and a rally. So here, this is a CP pattern. Normally, you draw this. Yeah, this is a Marubosu candle, an inside candle within this range there, and this is an engulfing pattern. You look left, okay, Marubosu candle, then basing candle, similar to the Marubosu, okay. But look at this. When you do have that, always do this, because many times price will drop down there, take you out, you will hit your head on against the wall, and you will say, why didn't I protect it, my trade a little bit more? So this is a basing candle there, I would take it. if this open or this low there is very like this, I'm not gonna do this. I mean, I'm not gonna draw this. This is a visual thing. This is something you have to practice. I'm not gonna do that. Okay, these are two different levels, but these are, as you can see, they are like contained within the same range. Okay, so now we continue. Okay, this is a rally, a base, and a rally. And look at the rally, that the rally was not an ERC candle. It was a basing candle as well. So this and didn't provide a big imbalance, no ERC candle. So if you draw that and you try to trade this kind of entries, then you are going to have lots of losses. I can assure you. So what happens here? See what happened there? Okay, the retest. And now what do we have here? Drop, base, and a rally. What pattern is this? There are 6 patterns that we are looking at. What is this one called? Anybody? We have repeated. Yeah, Hugh said that. Chris as well. Is Jim as well. This is a bullish engulfing pattern. So bullish engulfing pattern. What do we do with a bullish engulfing pattern? We look left and we find the first candle on the left that was engulfed. The only part of the candle that needs to be engulfed is the body of the candle. If the wicks are engulfed, better, but only the body is needed. So we look left. What we do mechanically is we measure from the high of range to the low of the range. Okay, do we have a candle on the left that closes or opens above that range? Yes, that one. Is that a basing candle? Yes, but it is outside the range of the first candle, so we don't take that into account for the basing. Is that understood? This is the way to draw the levels. Okay, it's taken me some time to come up with that rule, but it is a very mechanical, and that will guarantee you that you are drawing the levels as they are, always the same. Hughes asking, regarding this CP pattern of demand, should we ignore the first base bar as next bar closes above high of a modest first base bar? This one, you mean? Or this one? Left, this one. I mean, yes, we should ignore it, but experience tells me that price many times will do like this. I will drop there. And then what I do is that I'm just adding some more pips to protect myself, and I will adjust my lots. That's all. So there it is. So here we do have another bullish engulfing pattern. Okay, I'm just trying to locate the levels. I'm not trying to use the 2-to-1 rule. I'm just trying to locate the levels, the imbalances. This is not a great imbalance, not 2-to-1. Okay, but it is a level, but not a tradable level. Okay, we will have to wait for confirmation there. And now what do we have here? Another bullish engulfing pattern. We look left. This is the whole candle range. We've got one candle that opens or closes above that candle range on the left, the first one, so we stop there. Now we are overextended. I don't know if this is going to drop sooner or later, so let's see. And there we have another level there. Okay, so basing, 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 basing. We take the lowest low, which is this fractal low, and we take the highest open or close of the 4 basing candles. That is the level. As simple as that. You could say, okay, I'm going to draw this like that, because now you have seen that it has reacted. But normally the rule is all basing candles, the highest open or close of all the basing areas. 6 candles maximum. Now, there. Price is overextended as that one didn't hold, and now price is starting to reject that area. Okay. 1 sec. I need to pick up a phone call. 1 sec. Yeah, the beach is awaiting me, Hugh. I had a lunch on the beach now with some friends. So there. Now, as you can see there on the daily, isn't price overextended? I mean, I'm not trying to This is all in hindsight, okay, but just isn't it too high in the chart? Isn't too many CP patterns of demand? It is time for price to start dropping, selling off all the guys and institutions and retailers and hedge funds and all that were buying lower from here and here and there after such a big rally in price, almost 1,000 pips. Don't you think that they are going to start exiting the positions and taking profits? Isn't it logical? It is logical. So now look at that one. What do we have there? There, right there. We do have rally base drop. This is an engulfing basing area and then engulfs. But you say, oops, now we can short. I don't know. Okay, I don't know if we have a higher time frame area of supply. We have hit there. This could be a confirmation type of trade on the daily, but I'm not going to enter in those details. You should know the rules by now there. So if we hit a weekly area of supply or a monthly area of supply, and we have that is a confirmation type of trade on the daily. Price drops for 5 days, returns, and that's the trade. But I'm not going to enter in those details now. Okay. That area, weekly area, I don't know yet because I'm not looking at the weekly here. Now, right now, or before that one. What do you mean exactly here? So let me locate this. It broke that area, and now the weekly is overextended. Price is rejecting that area. And there, this is what we have. Price is reacting to a monthly area of supply. So, okay, basing, you can draw that zone like that, or you can draw the zone like that. But when we do have an engulfing, bullish engulfing pattern that it is also 50%, I will normally do like that. Since this is the monthly, I would just wait for price to hit that area and wait for a confirmation type of trade. Okay, I'm not going to trade off the weekly, monthly area of supply. I just want to know that I am too high, and if I start seeing rejections from that area and I start seeing price dropping, then we should be maybe looking for shorts. So let me see what happened there. I'm just trying to tell you, show you the levels. Okay, if you are aggressive, this is the trend line. Okay, there. So now this is the area. It didn't break the trend line, but now we do have a, I don't know why this button there. Let me do this. I think I did something wrong. Now the button is there. Okay, I removed the button by mistake. So let me do this. Scale button. So now, sorry, the level was like that. And covering the highest high. Swing high. There. So now price dropped. It didn't remove demand, but now there it was removed. But we do have a rally, a base, and a drop. So the level from there and the basing, because this open is outside of this range. Okay, it's like another level, so that is another area there. This is not supply because it didn't drop lower. So now we do have another rally base drops. So this is an engulfing pattern. Okay, so we take the candle on the left. This is the whole range. This candle closes on that area, so the whole area is like that. Okay, you could drill it down here, okay, but draw it like that, because if price hits that, if you draw it like this, okay, and price falls short of a few pips and drops, this level is already touched. But since you draw it incorrectly, then for you it's still fresh. It's a big difference. So now price drops, it removes all these areas of demand, and we create new areas of supply here. So here we do have there, rally, base, drop. So we do have a drop, a base, and a drop. So here we have a CP pattern of the supply, and we started to consolidate from there a lot. Okay, a lot. And here we do have this area, a drop, a base, and a rally, a base, and a rally. Okay, I remember I had a loss there on the daily because it rode higher, removed supply, and I traded it, and it didn't work. Now, oops, sorry. So here we do have another area there, rally, base, rally. The level is there, okay, and now it drops, and look at this level, rally, base, drop. This candle, isn't this candle engulfed? So we take a look at the first candle on the left, the high, the low. Do we have candles on the left that are enclosed within that area? So this base, this open, is valid. So the level is from the highest high to there. That is the level. Okay, you could say, okay, that this is the level, but you could be forgetting about this fractal there. This is the highest high in the zone, so I want to be protected. You can't, I mean, you will see many levels that do like this, and then drops. And if you don't protect yourself, you've got a problem. So we've got drop, base, drop, and now we do have a CP pattern of supply right at the confluence of the last month high. So these are supply. Wasn't hit, and now what did happen here? We've got a rally, a base, 1, 2, 3, 4, 5, 6 candles, good for the base. This candle engulfed this area, okay, this area over there. So we do this mechanically. This is the high, this is the low, and this is the whole range. Okay, so we are allowed to draw the level like from here. This is on another, it opens above that area, so I will do like that. Okay, so the level could be like that. It was overshot, and there was a level there, an engulfing pattern there. I'm going to show a few pips, and this is the level from there to there, but we need to cover the lowest low, which is the fractal low. Okay, so this is, we've got a drop. This is a piercing pattern. It didn't engulf, so but in engulf it covered, penetrated the previous bearish candle by 50% or more. So this is piercing that cloud cover for the opposite, for the bearish candle. If it close above, then it is a bullish engulfing pattern. If it doesn't close, it is a piercing pattern, 50% or more. And if it doesn't do 50% and it is a basing candle, it is a harami. And then we do have a bearish engulfing pattern, a candle, and then we do have an engulfing bullish candle. So that is there, price reacted to that area, and then price is reacting again to this area. So, and now up there, rally, base, drop, engulf. We look left, draw. This is, I don't draw the lines, but just telling you how you mechanically draw this. Okay, look left. This candle opens without that range, so that is the level. Is that clear? Is that clear how you mechanically draw the levels? So now these levels are no longer valid. Now you see here, drop, base, drop, a basing candle that removed this demand area over there, okay, and overshot that area down there. So this is how you locate CP patterns and all levels. I mean, you just have to pay attention to these 6 patterns. Okay, bullish side, engulfing, piercing, and bullish harami, and to the bearish side for the sells and shorts, the bearish harami, bearish engulfing pattern, and the dark cloud clover, which is the same as a piercing pattern. The penetration here is pierced the candles, the previous candle, but it doesn't engulf it. Okay, so that's a piercing pattern. So the opposite is the same thing. You could call it like a bearish piercing pattern, but they call it dark cloud cover. Okay, So I believe that Nick is asking, will there be a lesson of patterns and their relation to the supply and demand? Yes, there will be, but not yet, Nick. Yes, I will. I will write. I will send the email, Philippe. I'm not gonna write the patterns here on the chat log, but what I'm gonna do is when I send the video link, I will make a small summary like always, and I will mention the names of those 6 patterns. You can buy a good book, but Steve Nissen is the best, so buy a book by him and just concentrate on those 6 patterns because those are the ones that we use for supply and demand. The others, there are many others, but that makes things more and more complex. Okay. So this is all for today's webinar. I have to leave before this time, 15 minutes before, otherwise I'm gonna miss my lunch. So I will be uploading the video after I finish the webinar, and I will send you an email during the day, at the end of the day probably. Okay, hopefully that you will have enjoyed the lesson and you will have learned how to mechanically draw the trend lines and how they apply and how they are combined with the supply and demand levels and all these 6 patterns, these classic pattern candlestick patterns. Okay, thanks a lot and enjoy your day. Bye bye.